What is going on, guys? Today we are going to be talking about risk management. Now, before you skip this video, I just want to let you guys know that risk management is probably one of the biggest and the best things to learn, even as a beginner, right? You definitely need to learn this as a beginner, and even if you're an advanced trader, you still need to have risk management in your plans, right? If you're an advanced trader, or you think that you're an advanced trader and you have no clue what I'm talking about with risk management, you definitely need to stay here and learn from this video. So before I begin, I just want to make sure you guys are subscribed. Make sure you guys leave a like, comment down below what stocks you guys are looking at for this week, what you guys trade today, anything like that, any videos that you guys want me to do in the future. Make sure you guys go do that down below. I'll give you guys like 5 seconds. I still know that you guys didn't subscribe, so make sure you guys hit that subscribe button. I'm not going to say again for this video. Alright, so it's not about how much money you make as a trader. We can all agree, there's a lot of people out there that make $20,000 a day, $50,000 a day. I am, one of them. And the thing is, it's not about how much money you have. It's about how much money you keep. Because I can turn an account from $100,000 to over $1 million. And in one trade, I can completely blow that. Like, it can go completely to zero. I could lose a ton of money. So it's not about how much money I make as a trader. It's actually how much you keep. And that's another big thing. If you guys want to write that down, that's a big thing to understand, right? You can go from $1,000 and, you can slowly build it up to like 10 grand, right? But then there's this guy, Davis, for example, he turns it from $1,000 to $1 million, right? And the next trade, oh, I'm just going to keep holding this, and he turns it back down to zero because it expired worthless or whatever Davis did, right? It's not about getting rich quick. It's about keeping the trades, making sure you're efficient with them, making sure you're disciplined, make sure you have a risk management strategy. So, in order to keep that money, you need a risk management plan, right? And this is what this video is going to be about. This is going to be key to becoming a successful trader. You have to be very disciplined, and you have to have a risk management strategy down packed, ready to go, a plan in place before you even execute the trade. I'm talking about before you even get in Tesla, right? Let's say you're getting in Tesla calls above 900. You need to know where your exit is going to be before you get in. You need to know your max loss per that trade. You need to know how many contracts you're actually going to be working with, or if you're playing shares, how many shares am I able to get before it hits my max loss, right? So you need to know all that, and I'm going to go over that in this video. So definitely stay tuned with that. This is why, again, majority of traders do lose money, and this is the reason why. They don't know how to protect their capital, and this is what I'm going to go over. This video right here, right? People lose money because they don't know how to keep it. Like, we can all agree, if you just kept winning and winning and winning, you'll never lose, right? But again, there's traders, everyone loses money. Traders out there lose money all the time. Now, some of them might not lose as often as others, but again, it's all about how you handle those losses. You got to be able to keep your capital and preserve it the right way. Risk management is the biggest thing. I would honestly, if you don't even focus about your winners right now, focus about your losers and how you can manage those losers to make them smaller, or how to fully minimize that risk, right? How to make sure you have a controlled loss instead of just fully going out and completely blowing your account. Make sure you guys actually establish a risk management strategy, right? You could have a 90% win rate and 10% of those plays you lose, right? That's just how it works. You have a 90% win rate, the other 10% you're going to lose. But if you don't know how to handle those 10% of losses, you can completely dump your account. You could have a 95% win rate, and if you lose on 5% of the plays, and let's say you let all 5% of those plays go down to zero or go down negative 80%, you can completely blow that account. So it's not about really the win rate, but it's just about how you handle the losses. And when I look at people, I try and judge them on their losing plays so I know what kind of trader they are and see if they have a risk management strategy. Because I'd rather focus on someone that has a 70% win rate and knows how to manage his risk versus someone that has a 90% win rate and completely blows his other 10% of his trades. He's down 40-50% on each play. So that's a big thing that I'm looking at, and that's literally how you stay alive as a trader in the market. So again, if you guys don't know by the title of this video, we're going over risk management. That was my little intro. Hopefully you guys are still here because we do have it pretty packed down today. We are using the whiteboard. My name's on the top, so make sure you guys go and follow my Instagram. I answer DMs on my Instagram for free, obviously. But definitely, if you guys are having any questions or you guys struggling a little bit, definitely reach out to me on my Instagram. It is on the right side, or it should be. It's marked in red. But yeah, definitely go utilize that. Now, first things first, how do we know how much we're willing to risk, right? So let's say, for example, and again, I'm getting better at drawing. Look at that. Let's say we have $10,000, right? Now, whatever amount that you guys have, so let's say, for example, this is 10,000. Let's say you have $1,000, right? You guys can still apply the same rules what I'm doing. Just make sure you guys are, whatever account size you guys have, make sure match it up with mine, right? Let's say you have a $5,000 account. Let's say you have a $10,000 account, $20,000. Make sure you guys are matching it with mine, because I am going to be using percentages. So it applies to each and every single one of you guys' accounts. Just make sure you guys know a little bit of math. So now we're going to go over how much risk should you take. So for this example, I'll be using $10,000. Honestly, I'll probably have both of them on there, because I know some people are probably confused at this point. Hopefully not. But I'm going to be using these two as an example. So what I like to have as a base for the risk amount that you're able to lose per trade, I like to base it off the entire account, right? So the entire account is 10,000 or 5,000. These are two different examples. What I like to do is have a 2 to 5% max risk per trade, meaning that $10,000 times 2%, right? So for example, we're willing to risk $100 per trade. That's a max risk, right? This one's going to be $200. We're willing to risk $200 per trade. That's a max loss. No matter how many contracts we have, no matter how many shares we have, doesn't matter, right? This is the max loss we're willing to take on each play, right? As a trader, keep in mind, you will lose money. That's nothing you can control. It's all about how you're able to control that loss, right? In order to be a successful trader. It's just all about controlling it. You got to protect your downside at all costs, right? Keep in mind that cash is a position, and you got to figure out how to keep that, right? So with that in mind, we have to establish a max loss, and it's going to be a 2 to 5% for this example. And as beginners, or as someone that's watching this video, I would suggest, right, even though this does say 5%, I would suggest, honestly, using this 2%, right? Just start out with 2% and see how that goes as a trader, right? So 2% of $10,000 is $200. 2% of $5,000 is $100. 2% of $2,000 is $40. So that's the max loss per trade. If you're in a trade, doesn't matter how many contracts you have, how many shares you have, you should not lose more than $200 per trade if you have $10,000. If you have $5,000, the max loss you should take is $100. No more, right? This is the max. No more than that, right? Unless, you're starting to get the hang of it and you're starting to be more of a profitable trader, more efficient in your trades and everything like that, then you can start moving it up. But for right now, starting out, and even some intermediate traders, start out with 2%, right? There's no point of risking more capital for absolutely no reason. This is how you blow an account. So, keeping this in mind, apply that to your own account, right? If you have $1,000, 2% risk, that's about $20, right? Now, you might be thinking, that's really nothing, I'm only risking $20. No, don't think about it that way. Think about it if, you building up an account. Build it up the right way. Stop building it up thinking that you're going to get rich quick. This will help you and save you, whenever you're in the situation where you could have took a bigger loss, you'll have this video in mind. You'll be like, wow, this guy's right. This random guy on YouTube is right. Protecting your downsides, because then you'll see other people in the same exact trade lose about 20% of their entire portfolio because they're not, utilizing this strategy. They're not utilizing the risk management strategy that we're going over right now. So this video is about protecting your downside. So keeping this in mind, we got to figure out, right? We're going to keep the, we'll start out with the $10,000 account. Max risk is $200, right? Now, keeping that in mind, that is the biggest loss that we could take per trade, no matter how many contracts we have, anything, right? So, keeping that in mind, let's say we have Tesla right here. All right, so this is Tesla. Let's get this. Listen, I'm not the best at drawing whatsoever, but I can teach you about risk management though, so that is a good thing. So we're gonna go over how on earth do we put this into a trade? How do we know our position size? How do we know all that, right? How do we know what to do in the situation now that we know our max risk, right? So how do we do this? First of all, we got to determine if we're playing shares or we're playing contracts, because contracts move a little different. You got to be very careful with options. But with shares, this is why I suggest people starting out with shares, so you understand risk and you understand price action and reading the tape and everything like that. And then once you start to get a hang of that, then you can start getting into options. But I'll go over options for this video just because I am mainly an options trader for you guys that don't know. So that's why I'm going to go over the options part of it. So here is our max risk, right? So let's say we have a $10,000 account. 1, 2, 3, and our max. And this is the three things that you got to remember before entering the trade is, what is my max loss? Going over what we just went over, our max loss is going to be $200. Now, before getting into the trade, and remember, this is before we're getting into the trade. You should not be doing this after because it wouldn't make sense, right? You need to understand our position sizing in accordance to this max loss, right? So our max loss is $200. Let's say a contract of Tesla is, let's say it's $2,000, right? Let's say this is 900 break. A contract, I wish I could type on here. Contract is going to be, let's say, we'll go with $2,000, okay? So each contract is going to cost $2,000. For anyone that doesn't know, a contract is equating to 100 shares, right? So keeping that in mind, contract's worth $2,000. Let's say we get so let's say, for example, this comes up, right? Let's just do this, and we're going to wait for this break, right? We're going to keep in mind that the contracts are $2,000, right? Now, looking at the contracts, because you can see the history of the contracts if you're on TOS, if you're on Webull, you can see the contracts history, right? Say the contracts are $2,000. Now, in order to find the trend reversal, right, we don't get out on a specific percentage. We get out on either a trend reversal, right? And your trend reversal has to line up with your max loss. You're not going to go for a $2,000 contract and your trend reversal doesn't state until $500 loss. Like, for example, if let's say the contracts, in order for this to be invalidated, in order for you to say, oh, I'm wrong in this example, let's say the contracts would have to be at $1,500 and it'll be out. That's a $500 loss. You should not be picking up those contracts. That's more than your $200 goal, right? Now, if you're on that 5%, then maybe that's okay. But for this example, you need to find a cheaper contract or just don't play because that risk to reward is just not there for your account size or it's just not there overall. So now keeping that in mind, we have to do something that makes sense, right? You can't just have a 10% stop loss or anything like that because that means that the trend wasn't invalidated. It's just you had a 10% stop loss, not each percentage. Like the percentages don't always work with each and every single contract. You might get stopped out at only 5% because the trend reversed at that 5% level, or that just determines that you're wrong. It all depends on the trend and all depends on price action. Don't just rely on percentages. But this is why we have this thing right here and options history, or just a stock itself if you're playing shares. This is why we utilize all these things so we maximize our profits and minimize our risk. We need to make sure that we have a minimum risk, a minimal downside to these plays so we don't blow our account, right? We got to make sure that if we are wrong, we know when we're wrong and we know that this is going to be our max loss. It's not going to go over it. It might go under it, right? That's fine. We might only lose $100 for the trade. That's totally fine. But as long as we don't lose that $200 per trade, we are totally okay. So now determining on how many contracts, let's say this is 1,800, right? Let's say I'm gonna figure out how to write on this, like actually type. I probably can't. So let's say right here. And let's say right here. So let's say the contracts are $2,000, right? And let's say we're looking at the history. Before we're even in the play, we're going to look at the option history to see what the prices are going to be around, you know, when determining the trend reversal. So let's say we know the trend is going to reverse right here. Let's say it's around $1,800, right? Let's say $1,800. We're like, okay, you know, this is going to be our max risk. You know, we can grab one contract and this is going to be our max risk, right? You know, this 2,000 minus 1,800 is going to be that $200. That equates to a great risk management, right? So if the trend reverses, we'll only lose $200, okay? You know, looking at the option history and everything like that, we could determine this is a great trade, right? Now, obviously, it might not be a great trade with price action. I don't know what's going on here. But risk-wise, you know, your risk management plan, this is pretty great. Remember, we're already establishing our loss. You got to think of it this way. Before you get into the play, you got to think about the loss before you get in. Like, imagine the trade going against you before you enter the trade. And this is exactly what we're doing. We're already setting up that risk before we're getting in. This way, you could properly establish that risk management plan and know when you're going to exit safely and take a controlled loss on that trade, right? So this is our get out point at $1,800. Now, again, this is self-explanatory. If this thing comes down, you'll be okay with losing. Hopefully, you'll be okay with losing $200, right? I already made a video about this on, you know, hesitation and controlling your emotions in the trade. It's literally the video right before this. It's called how to avoid hesitation as a trader, or how to not feel hesitation as a trader, or something along those lines. It's a video right before this. So make sure you guys go and check that out. With that being said, you guys should be okay with losing $200, right? This is going to be our max risk. Once it hits at $200, we're out. Once it hits $1,800, we are out on the trade. We lost $200, a nice controlled risk, right? Let's say this is like Kip, right? This is Kip, for example. He understood the assignment where the risk management strategy determined that he has to get out at $1,800, right? This is his max risk. So now Kip's portfolio, his P&L is looking something like this, right? Nice and controlled losses. Nice, you know, maybe he messed up a little bit on this day, but then he's bouncing right back, right? That's his portfolio with this risk management strategy. Now, let's say, for example, I wish I could just I could hold this. Okay, good. I'm getting better at this, guys. Don't worry. All right, so let's say, for example, this is Davis, right? And let's say he's playing the 900 break. This is the 900 break. And let's say he had no clue what he was doing and he was about to full port this, right? He was full porting this. Each contract cost about, let's say $2,000. So same thing, same example. Each contract costs about $2,000, you know, 2,000 here. So this is 2K. This right here is 1.8K, right? That's the loss, right? But he doesn't know this. He doesn't know his max risk from right here. So let's say he just full ports it and he gets 5 contracts. Now Davis not only has his full entire portfolio into this play, he has 5 contracts, meaning that his emotions, even if he doesn't think so, his emotions are out of control. Because if he loses, and he's not even thinking about the downside right now, he's just thinking about getting rich quick. He's like, oh, this goes up. I am banking right now, right? That's not what you should be doing, right? Because if this starts going against him, his emotion is going to be out of control. You get to this point, you're going to be down about $1,000, right? He's like, oh my gosh, dude, I'm down $1,000. Let's say, it's right here. He's down about $1,000. He's like, oh shoot, I can't lose this money. I'm going to keep holding, right? And it starts coming up, and he's like, all right, good, I'm glad I'm holding. Comes back down. Now he's down to $1,000, and he's like, oh, I can't lose this. I got to keep holding. Starts going down some more. He's like, oh my gosh, dude, I'm down $4,000 right now, right? Super emotional. He can get out here for a $4,000 loss. He's like, oh, I can't lose money on this play. I'm super emotional. I don't know what I'm doing. Starts coming up. He's like, all right, good. I'm starting to come up. Now he's only down $2,000. Completely tanks. He's down about $8,000, and he finally decides to cut it. because he's like, this stuff is not for me at all. Now his account, instead of being at $10,000, do you know where he's at? He's at $2,000 on one trade. How does Davis lose $8,000 on the same trade that Kip was able to only lose $200? You guys see what I'm talking about here? Risk management is so important. This guy lost $8,000 on the same trade, where Kip only lost $200. Same account size, same contracts. It's crazy to think that there is people that trade like this and they give up because they don't understand basic risk management. And this is why I made this video, to determine what my max risk is. Now, I'll give you guys another example, right? So if I can, oh, there it goes. Okay, so here's another example, right? Now, contracts, I'm going to go over contracts. So let's say, right? Here's a good one. So let's say we're playing a video, NVDA, and our account size is $10,000. Actually, let's do, we'll keep it there actually. Let's do $10,000, and our max risk is $200, right? That 2%. So this is our max risk. And knowing that, let's say contracts are like $500 a piece, right? And let's say trend reverses at only $50. Like, let's say, for example, this is $500 and trend reverses at $450, right, per contract. So now we're losing about $50 per trade. So in this trade, we're going to lose $50 per contract. Determining that, how many contracts are we able to grab, right? How many contracts at the very most, like how many contracts are we able to take on? So we're going to do 500, right? 500 per play, and we're going to do $50, right? So $50 is the max risk. Now, 200 divided by 50, you're going to get 4, right? This is the max contracts we're able to take on, right? If we have this stop at 450, 4 contracts is the max amount of contracts we're able to take because the trend reverses at 450. Now, if the trend reversed at 400, remember, this is not from percentages. This is from the trend reversal. We go along of what the trend says, what price action gives us. Let's say this reverses at 400. Instead of taking 4 contracts, how many do we take? Right now, this is a $100 loss, and each contract costs about $500. We're going to divide 200. Remember, this is our max risk. We're going to divide that by 100. You're going to get 2. So now you can only have 2 contracts in this trade. See where I'm going with this? So this is so important. Hopefully you guys stayed through the entire video so you guys understand this. And hopefully this guys helped you a lot. If not, definitely give me some feedback down below. If this did help you, also give me some feedback down below. Make sure you guys leave a like. Comment down below. What is your 2% rule? Let's say you have $1,000 in your account. What is your 2%? So I know you guys stayed through the whole video. What is your guys' 2% on your account value? And make sure you guys subscribe. And wherever the Instagram thing is right here, make sure you guys go check that out as well. Make sure you guys also check out the previous videos. Other than that, I'm going to stop promoting myself. And hopefully you guys did something with this whole entire lesson. And I'll see you guys next time. Peace.